A couple things. If you look at two key components of our lead indicator for retail sales, the jobs market, and the second is the wealth effect, both have gotten better over the last few weeks. So the jobs numbers have been better. We look at underemployment, which has also gotten to a record low level this cycle. Combined with the stock market hitting new highs, that should help retail sales. So we took our forecast from 3.5% to 4%. For both the fourth quarter this year and 2020.
You have outperform ratings on Amazon, BJ's, Costco, Home Depot, and Lowe's, and neutrals on Target, Walmart, Dollar Tree, and an underperform on Dollar General. What makes the outperforms outperform, if you can generalize, and what makes the neutrals neutral?
Well, the outperform is basically which retailers are really getting omni-channel right, because what we are seeing in all of our consumer survey work is consumers asking for more multi-channel and omni-channel. So we still think the secular trend of e-commerce is with us. It's around 15% of U.S. retail sales, growing in the mid-teens. And we think in probably 10 years, that number will be closer to 30%, with a lot more of it being omni-channel. So those winners you listed are companies that are getting it right, generally speaking. We think it's not fully in the share prices yet.
Walmart and Target are neutral, according to you. Is that just because of their run and where they're valued right now? What should they be valued at?
Yeah, the issue is really valuation. So in the case of Walmart, they've done a great job sort of putting multi-channel together, but the stock's run up to 23 times earnings, or a 40% premium to the market, which is sort of the highest it's been in a couple decades. So we would encourage people to look at other names that haven't had that same sort of run. Home Depot is one that we highlight, especially because our home improvement lead indicator is accelerating into next year. So we think you'll see better sales out of home improvement, in particular, in Home Depot into next year. Target's also doing very well on the multi-channel front, but the stock's up like 60% this year. And we think about risks, and while this isn't our base case, we do think there are still risks for tariffs, as you can see just the market reaction today. Frankly, if tariffs did get implemented across the board, we would probably have to cut our numbers. We're looking for 8% growth across retail next year. We probably have to cut that earnings growth at least in half if you saw List 4B actually go into effect at, say, 25%. So some of those risks that are out there we think are bigger for names like Target.
And those are the December 15th tariffs. So you would cut the numbers because the retailers would have to absorb the cost of the tariffs. And then there's like the double whammy in terms of your forecast for the holiday season, because the wealth effect, if that's the rise in the stock market and those tariffs go into effect, I would assume that would impact how that gets factored into your forecast as well.
Well, it's a great question. So Melissa, I think there's a near term and a medium term. So in the near term, given it would be December 15th, I don't think that would show up in inflation for this holiday, right? Because the inventory's already been bought. It'll probably already be in stores or at least in an Amazon fulfillment center by December 15th. So we're really then talking about the 2020 estimates, where we would estimate that they won't be able to pass it all through. I mean, the consumer's in a good spot, good jobs, good wage growth. But if you tried to pass through that full effect of tariffs, we do think there would be some demand response and some margin impact for the retailers.
Is Amazon your favorite in this group? I can't think of another. I think of Disney as a company that has multiple ways to make money. They've got gazillion ways to spend money. And Amazon seems to have a similar kind of flywheel effect there. They've got their core retail, they've got video, they've got music, they've got production, they've got Whole Foods.
So look, we have an outperform on Amazon. My partner Lee Horowitz and I and the internet team like it a lot, and we think what you just described we would call a platform company. Dennis DeBuscher, our strategist, done a lot of good work on this, describing how names like Amazon, like Walmart, frankly, and we would say Home Depot is also a high-quality platform company that can find ways to expand their market beyond their traditional retail market and monetize it. So you rightfully point out in the case of Amazon, we think this investment cycle that they just entered this year could be one of the shortest on record for them, because their advertising business looks like it's going to grow $3.5 to $4 billion next year and the year after. That could easily fund all of next day and free Amazon Fresh shipping.